Welcome to the Deep Dive. Today we're taking a close look at Tesla. We're digging into their first quarter 2025 results, the Q&A webcast.
Right, and we're also pulling in some outside views. There's a CNBC report on Q1 deliveries and a YouTube take on the stock itself.
Yeah, exactly. So the mission here is to really pull out the crucial insights, figure out what they mean for Tesla, and the broader industry.
Yeah, we've got a good mix. We'll hear directly from Musk and his team on the earnings call. Then there's the news analysis looking at those delivery numbers.
And the financial commentator sort of weighing the stock moves against the company's fundamentals. Should give you a pretty well-rounded picture.
Hopefully, yeah.
Okay, let's jump right in. Elon Musk's opening remarks. He mentioned spending time with the Department of Government Efficiency, DOGE, he called it. What was that about?
Yeah, interestingly, he framed that work as being about tackling the national deficit, finding and cutting out waste and fraud in government spending. A big goal.
Trying to improve the country's finances, essentially.
That was the pitch.
And sounds like that didn't exactly go smoothly. Some pushback.
Right. He talked about getting blowback, even protests. He seemed to think it was coming from people receiving what he called wasteful dollars, or maybe fortunate dollars.
So connecting the protests directly to his efficiency efforts?
That was his take, yeah. He felt it was a direct consequence of, trying to tighten the belt.
But now it sounds like his focus is shifting back more towards Tesla.
That's what he indicated. He said the initial setup for DOGE, getting the team and processes in place, is mostly done. So starting next month, May 2025, he expects to spend significantly less time on government stuff.
How much less?
Maybe just a day or two a week for the rest of this administration, kind of overseeing things. So yeah, a big shift back to Tesla operations.
Okay. And moving to Tesla itself. How did he describe the company's current state? Was there any sense of crisis?
No, he was quite clear on that. He explicitly said Tesla is not in a near-death situation right now.
He acknowledged they've had those moments in the past, though.
Oh, yeah, definitely. He referenced those past crises, the close calls, but he emphasized this isn't one of them. He did say, expect some unexpected bumps this year.
Right.
But overall, still extremely optimistic about Tesla's future.
And that optimism, it really seems tied to his long-term vision, doesn't it? What are the key parts of that again?
It really boils down to two main things. First, getting to large-scale autonomous cars. And second, deploying huge numbers of useful autonomous humanoid robots. Optimus.
Right, Optimus.
He stressed the, just staggering potential value of a company that pulls that off, especially at scale and low cost. He basically repeated his belief that Tesla could become the most valuable company globally.
Even more valuable than, what, the next 5 biggest combined, potentially?
Yeah, that's what he suggested, yeah.
If they execute well.
Wow, okay. And did he give any timelines? Especially for the autonomous ride service?
He did. He mentioned expecting to launch fully autonomous paid rides in Austin starting this June.
June, okay, so
Right.
very soon. And financially. When does that start making a real difference? He thinks it becomes financially material around the middle to the second half of next year. And after that, he predicted exponential growth.
Exponential. Okay. Another big topic, especially now, is supply chains. How's Tesla handling that?
Yeah, they seem pretty focused on that. The strategy is basically localizing supply chains. So building stuff near their factories in America, Europe, and China.
Which helps with costs, obviously, and logistics.
Right, and it also makes them less exposed to tariffs. Now, he did acknowledge that tariff decisions are ultimately up to the U.S. president.
Of course.
But he reiterated his personal view that, lower tariffs are generally better for the economy.
Got it. There was also some talk about robotaxi versus cybercab. Can you clear that up?
Sure. So the way Musk explained it, any autonomous Tesla S3 XY could function as a robotaxi. It's like a generic term.
Okay.
Cybercab is the specific product name for their purpose-built autonomous vehicle, the one they're designing from the ground up.
Ah, okay. The dedicated one.
Exactly. But the key point is the autonomy system itself. They're building a generalized solution. So once it works well and gets approved in a few cities in one country, say.
They can roll it out much faster elsewhere in that same jurisdiction.
Precisely. And that's possible because of their approach using their own AI chips, camera-based vision, not relying on, super expensive LiDAR or needing high-definition maps for every single street.
Right, different philosophy there.
Okay.
Switching gears, slightly optimist, the robot. How's that coming along?
He sounded pretty bullish on Optimus. The expectation is to have thousands of them actually working in Tesla factories by the end of 2025.
Thousands by year end. That's ambitious.
And the longer-term goal is scaling production to millions per year, maybe hitting 1 million units annually by, like, 2029 or 2030.
Wow. Okay. And Tesla's not just cars, right? The energy business is a big piece, too. How's that doing?
Apparently, very well. Really strong. Musk highlighted their Megapack product.
The big battery storage units.
Yeah. He explained how they let utility companies basically buffer energy, which means they can get more total output from their existing power plants. It smooths things out.
So high demand for those.
Very strong demand, yeah. They're seeing orders for gigawatt-scale factories now, and the long-term vision there is massive scaling up to terawatt-level stationary storage.
Terawatt levels. Okay. Let's talk about Q1 specifically. It can be a slow quarter for car sales generally. What were the specific challenges for Tesla?
Well, Musk mentioned the usual Q1 stuff, winter conditions impacting sales. But the big thing this Q1 was the global switchover to the new Model Y.
They did that in all factories at the same time.
All factories, globally, simultaneously.
Yeah.
Which he described as, a major and difficult undertaking, especially since the Model Y is still the world's best-selling car. Over 1.1 million a year.
Yeah, doing that kind of transition on your bestseller everywhere at once, that would definitely impact things temporarily.
For sure.
And Musk wrapped up his opening remarks with a pretty broad vision, right?
He did. He brought it back to Tesla's ultimate goal, delivering sustainable abundance for all. And the key to that, in his view, is affordable AI-powered robots.
So using AI and robotics to create widespread abundance, but sustainably.
That's the grand vision he painted, yeah. Most desirable future, as he put it.
Okay. Bev, who we assume is Debate Nia, also gave some opening thoughts, focusing more on the operations side.
Right. Bev really emphasized the factory update achievement, doing that simultaneous global update for the Model Y within the quarter and hitting their timelines, called it unprecedented.
Okay, what else?
Also pointed out a record gross profit for the energy storage business in Q1, which is interesting given some other pressures.
And on the vehicle delivery decline.
Acknowledged it, yeah. Attributed it mostly to those planned factory shutdowns for the Model Y updates, which meant the new version wasn't available right away.
Makes sense.
She also mentioned some negative impact from vandalism and sort of hostility towards the brand in some places.
Interesting.
But despite the transition, the leftover inventory of the old Model Y still sold out in the US, China, and other markets.
So underlying demand was still there for the outgoing model.
Seems like it. She also talked up the updated vehicle lineup now and the benefits people are seeing from FSD Supervise, calling it a personal chauffeur, citing positive customer stories.
Right, focusing on the user experience there. Okay, let's dive into the financials a bit more. Margins, expenses. What did we learn about Q1?
Okay, so auto margins were down sequentially. Bev explained that was mainly due to fewer deliveries overall.
Right.
Less fixed cost absorption because of the factory downtime for the updates, and also lower revenue from regulatory credits.
Were there any offsets?
Partially offset by the pricing on the new Model Y. Meanwhile, energy storage, as mentioned, hit its highest gross profit ever, even though deployments were lower.
And services.
Services and other margins dipped slightly, mostly pressures from the used car business and their insurance arm.
Okay. What about spending? Operating expenses.
Those went up, driven mostly by big investments in AI Optimus especially, and also development costs for vehicle programs like Cybercab, Semi, and those upcoming affordable models.
But wasn't there some offset?
Yeah, offset somewhat by lower SG&A expenses, selling general and administrative costs.
Got it. And one last financial point.
Other income took a big hit because of mark-to-market losses on their Bitcoin holdings in Q1. That was a contrast to the previous quarter where they had gains.
The joys of crypto accounting.
Yeah.
Okay. Tariffs came up a lot. Bev went into quite a bit of detail.
Yeah.
What was the takeaway there?
Yeah, she really laid it out. First, she stressed Tesla's been working on regionalizing supply chains for years, pointed out the U.S. Model Y has been rated the most American-made car for 3 years running.
High USMCA compliance too, right?
About 85% for their U.S. lineup, yeah. Which helps a bit compared to others. But these upcoming Section 232 auto tariffs in May, those are still expected to hit.
How much?
Including Canada and Mexico, she estimated maybe a couple $1,000s per vehicle increase.
Okay, and the energy business impact?
That's actually hit harder because they source LFP battery cells, lithium iron phosphate, from China for that.
So what are they doing about that?
They're pushing hard to get local LFP cell manufacturing going in the U.S. and also finding non-China suppliers. But it takes time.
Right, and the China mega factory.
That'll serve markets outside the U.S.
Okay. And there was an interesting point about tariffs impacting capital investment, too.
Yeah, kind of counterintuitive. A lot of the high-tech manufacturing equipment they need has to be imported, often from China, so tariffs hit that too.
So even with cost optimizations, CapEx is still going to be high.
Expected to be over $10 billion this year, partly because of those tariff impacts on equipment.
Okay, a complex picture on tariffs. Let's move to the Q&A.
Mm-hmm.
Lots of interest in the robo-taxi launch. What were the key updates there?
Right. They confirmed again, fully autonomous, paid rides, Model Ys in Austin, still on track for June.
And then rapid scaling.
That's the plan. Scaling to many other U.S. cities by the end of this year. They talked about an S-curve adoption. Potentially millions of autonomous Teslas operating by the second half of next year.
Millions. Wow. Will they need different software versions for, say, snowy places?
They mentioned maybe localized parameter sets eventually as a refinement. But the core idea is a generalized solution. That's the advantage of their AI approach.
And they pointed to the China FSD rollout as evidence.
Exactly. How quickly they deployed FSD supervised there with relatively little local data. But the big challenge, they acknowledge, is validation, proving safety.
Especially those rare long-tail events.
Precisely. Which is why they need super sophisticated simulations, even using AI to generate video scenarios for testing.
And what's happening in Austin now?
They've got their QA fleet running constantly, gathering data, a convoy of Teslas, as they put it, reporting that critical interventions are rare now. And they mentioned those impressive videos coming out of China showing FSD supervised, handling really tricky roads.
Okay. What about the Cybercab itself, the purpose-built one? Any updates on its timeline?
Yeah, first big builds are expected end of Q2 2025, so about a year from now. Then large-scale equipment installation starts at Giga Texas in the months after that. Still on track for production next year.
And that's being built inside the existing Giga Texas.
Yep, alongside Model Y. Just emphasizes how massive that place is. 3 times the Pentagon, they said again.
Right. Now, the big question for many owners. When can they use FSD completely unsupervised in their own cars?
Yeah. Maybe not before the end of this year in the U.S. They're being really hardcore about safety, wanting it definitively safer than a human.
So robotaxi first, personal unsupervised later.
Seems that way. They expect several studies for personal use later this year, and Musk mentioned his asset test benchmark.
The sleeping test.
Yeah. Can you fall asleep and wake up at your destination? That's the goal for true unsupervised.
Got it. Affordability is always key. Any more hints about those cheaper Tesla models?
They confirmed, again, plans to release more affordable models this year. They're, working through the usual launch headaches.
But the ramp-up might be slower.
Maybe a bit slower than they'd hoped initially, pointing to sort of general industry turmoil. And the big constraint is using existing production lines.
Because they want full factory utilization.
Exactly. So that limits design flexibility quite a bit. The new models will likely look like current Teslas, but the focus is really on low cost of ownership, low monthly payments. That's the key differentiator they're aiming for.
Okay. How do they see their robo-taxi service stacking up against Waymo?
Well, Musk basically contrasted their approaches, pointed out Waymo's cars are much more expensive, low-volume production.
Whereas Tesla is aiming for low-cost, high-volume.
Right. And again, emphasizing their bet on pure AI with cameras, plus now adding audio for sirens versus Waymo's expensive sensor suite. He highlighted their in-house AI software and chip design teams,
suggesting they could grab a huge market share.
Yeah, because they already have this massive fleet of cars out there potentially capable of autonomy, plus the manufacturing scale. And crucially, the Model Y starting in Austin, they're just regular customer cars.
Just needing a software update.
Exactly. He even mentioned cars already moving autonomously within their factories from end of line to pickup. Said he's confident Model Ys will soon drive themselves right from the factory to the customer.
That's quite a picture.
Yeah.
What about this unboxed manufacturing method for the Cybercab? Sounds revolutionary. Updates.
Yeah, that's the key to the Cybercab's low cost and high automation. They're still working on the details, things like precisely joining big sub-assemblies, dealing with potential corrosion on uncoated aluminum, seam sealing.
Sounds complex.
It is. But they said early crash tests have been successful. The big test comes with those end of Q2 2025 builds. That's when they really see the whole unboxed process integrated. Test vehicles should be on roads a couple of months after that.
And they really see this as a game changer for manufacturing.
Totally. Called it a revolutionary system, unlike anything else globally. The factory is as much the product as the car.
And the goal is incredibly fast production.
The long-term goal is insane. 1 car every 5 seconds or less per line.
5 seconds.
Yeah, which they compared to a slow walking speed like 3 miles per hour. And they plan to bring some learnings back to existing lines, too.
What's their current best time?
Shanghai line is about 33 seconds. So this is aiming for like a 6 or 7 times improvement.
Wow. But it won't be perfect right away.
No, he cautioned the initial version might be like a C grade compared to the A+ of their best current lines like Shanghai. But the long-term potential is huge.
Okay. We talked about supply chains earlier, but how are they adapting specifically to global economic risks, tariffs, geopolitics?
Right, it's that regionalization strategy again. Part supply near the factories. North America, Berlin, Shanghai.
And the percentages are high.
Over 85% North American content for high-volume U.S. cars. Over 95% local content in Shanghai. Berlin is similar, except for batteries, which they're still working on localizing there.
And this strategy predates the pandemic.
Yeah, but it accelerated post-pandemic.
Okay.
It involves diversification, vertical integration, using analytics, local partnerships. It's a multi-pronged approach.
But they're not 100% immune.
No, definitely not. Lower volume models still have higher tariff risks, but their vertical integration is extreme. Building their own lithium refinery in Texas, a cathode refinery in Austin.
Which other car companies aren't doing.
Nope. They're also looking at anode production, maybe even anode-less batteries down the road. And for years now, they've been multi-sourcing every component from at least 2 different countries.
So building resilience layer by layer.
Exactly. Insourcing lithium in cathode is critical for battery independence. Their own cell production gives them, they claim, the lowest cost per kilowatt for cells bought in North America.
And regionalization helps with logistics too, right? Less stuck on ships.
Yeah, less working capital tied up, avoids port chaos, more resilience. They know 100% localization isn't realistic for everything, like specialized chips. So they work closely with partners, manage strategic stockpiles, while regional chip manufacturing gets built up.
And vertical integration goes beyond batteries.
Oh, yeah. Importing raw metal ingots and turning them into castings themselves, recycling plastics. They're even looking for alternative sources for rare earth magnets. It's pretty comprehensive.
What about battery supply constraints? Are those still an issue, especially with tariffs?
For vehicles, they say they're no longer cell-constrained. That's thanks to expanding U.S. production with partners, their own 4680 program, and localizing the upstream supply chain.
But tariffs are hitting the energy side.
Yes, the recent tariffs challenged Tesla Energy. But they say they anticipated this and have plans more sourcing options, plus their own in-house LFP production ramp-up.
Any internal challenges?
Just a minor one mentioned. Making sure the right cells get matched to the right battery packs efficiently.
Okay. There were rumors swirling about brand damage hurting orders. What was Tesla's response?
They pushed back a bit, highlighted how quickly all 4 factories ramped back up to previous Model Y rates after the upgrades, just 8 weeks.
Impressive recovery time.
Yeah, and noted that Tesla was still the best-selling car, not just EV in California in Q1, despite economic pressures and negative press.
And test drives?
Record number of global test drives in Q1, apparently. Suggests interest remains high. They acknowledged they aren't immune to macro demand shifts.
Of course.
But argued they don't see a specific drop in demand beyond those broader economic factors. And again, emphasized the focus on affordability.
Got it. Back to Optimus for a sec. The pilot line. Any tariff impacts there specifically? And where are the parts coming from?
Well, Optimus is still mostly R&D, right? Not big volume yet. Most of those thousands this year will come right at the end. And almost every part is new.
No existing supply chain.
Pretty much, except the Tesla AI computer. Motors, gearboxes, actuators, all new. Musk used an analogy. A complex product is limited by its slowest, unluckiest part times thousands of parts. Makes predicting the ramp-up really hard.
Any specific examples of hurdles?
Yeah, he mentioned needing export licenses from China for rare earth magnets used in the arm actuators because of potential military use concerns. They're working on resolving that.
Okay, turning to the CNBC report now. What were their key takeaways on Q1 deliveries and market share?
CNBC noted the 336,068 deliveries were below Wall Street forecasts, and that number was more like Q1, Q2 of 2022 levels, so a noticeable drop year over year.
What about Cybertruck?
They mentioned sightings in inventory lots, estimated maybe 6,000 to 7,000 U.S. deliveries in Q1.
And the stock connection.
Acknowledge the stock strength is tied to AI, robotics, autonomy. but said monthly delivery numbers still matter for the core business health.
Competition. BYD.
Yeah, it mentioned BYD is closing in, maybe surpassing Tesla in overall EV sales, but important caveat, a lot of BYD's numbers are hybrids, not pure EVs.
And Europe.
Reported significant drops in EV sales in several European countries. And even though the new Model Y Juniper is out there now, they haven't seen a big sales snapback yet.
And U.S. market share.
CNBC estimated Tesla's Q1 U.S. EV share at around 43%. That's down from 49% for all of last year. So, suggests some erosion there.
Okay. Now, YouTube analysis from Ricky Gutierrez. He had a bull trap warning on the stock. Why?
Yeah, he was basically skeptical of the recent stock surge, suggested it might be a bull trap, maybe pumped up by things like Cathie Wood repeating high price targets.
His argument being nothing fundamental changed.
Exactly. Said short-term pumps can happen without real business growth underneath. He pointed to what he called Tesla's terrible earnings and the fact that full autonomy isn't actually launched for personal use yet, unlike Waymo in Austin.
So, warning about hype versus reality?
Pretty much. Cautioned about overbought conditions, risk-reward. Highlighted that the core business isn't growing year over year right now, and guidance for 2025-26 was weak.
Did he mention past patterns?
Yeah, used past examples of Tesla stock pumps followed by pullbacks, advised people not to just follow hype, understand the fundamentals, and also threw in a comment about the fund manager cited having a poor recent track record.
Okay, a cautionary perspective there. Back to the Q&A, there was a question about why more people aren't buying Teslas, given the tech advantage.
Yeah.
What was the thinking there?
Yeah, it's framed as a puzzle. Model 3Y tech is arguably superior in the EV space, but EV penetration is still only around 15%. Why are people still buying BMWs, Mercedes?
And Musk's answer looked further ahead.
Right. He suggested that in an autonomous future, most people might not own cars anyway. He used that flip phone versus smartphone analogy again.
Arguing that focusing on improving non-autonomous gas cars is like perfecting the flip phone.
Basically, yeah. A dead end, in his view. He repeated his prediction. Buying a non-autonomous gas car soon will be like riding a horse while using a flip phone. Obsolete.
Okay. There were also questions about what software improvements are needed for true unsupervised FSD.
Right. They know interventions are still needed in the public FSD builds. The strategy now is focusing hard on Austin, the launch city, to really nail the issues found there.
They have a list.
A big list the team is working through. A key area is redundancy systems to prevent needing a takeover if a computer fails.
So reliability of both the AI and the underlying system.
Exactly. And just working through that long tail of really rare, weird edge cases.
Any specific improvements coming?
He mentioned the Austin version will incorporate audio input listening for sirens, for example. That's not on the current customer versions.
And remote support. Is that needed for safety?
No, they clarified remote support is there for increasing availability, helping with non-critical issues, not required for safe operation.
Got it. Back to Optimus briefly, its future supply chain. Still uncertain.
Yeah, some uncertainty on the final state and tariff impacts there. But they stressed again the huge steps taken to localize the overall Tesla supply chain, and efforts continue to localize more for Optimus and reduce geopolitical risk as it scales up.
Okay. And the initial robo-taxi launch in Austin scale. How many cars?
Initial launch will be small, maybe 10, 20 vehicles, monitored very closely, then rapid scaling after that.
But people should be able to request a ride soon.
Expectation is end of June or maybe July, you'll be able to request an autonomous Tesla ride in Austin via an app.
Right. And FSD pricing. Any thoughts on different tiers for supervised versus unsupervised?
Yes, they're considering multi-tiered pricing. Musk also noted that many current subscribers feel the $99 month is already too cheap, given the personal chauffeur capabilities.
Where's the real value jump in their view?
The key break point is when you can genuinely do other things, read, text, whatever, without the car nagging you. That ability will improve gradually, but once it's fully autonomous, letting you sleep, that $99 subscription will seem incredibly valuable, he suggested.
Makes sense. What about geographic expansion? India came up.
Yep, confirmed they're still working on entering India, called it a very hot market.
Right.
But the big hurdle is tariffs.
How high are they?
Currently, a 70% import tariff plus a 30% luxury tax basically doubles the car's price. So huge potential with India's middle class, but they need to figure out that tariff situation first.
Okay. The vision-only approach for autonomy. How do they handle things like sun glare, fog, dust?
They talked about using direct photon counting with their cameras, bypassing the normal image processor. Claim this lets them drive pretty much straight at the sun without being blinded.
And fog or darkness?
They claim it lets them see really well in dark and fog too, potentially better than humans.
Interesting tech claim. One more follow-up on the affordable models. Any more specifics on what they'll look like?
Again, the main message was affordability and using existing production lines. That limits the form factor variety.
So, likely similar shapes to current Teslas.
Probably resemble current Teslas in general form, yeah. But engineered to be affordable. They stress the intent isn't to make any car worse than past models. Quality focus remains.
Right. Elon Musk's stance on tariffs has seemed to evolve. What's his current position?
He acknowledged he previously argued for gradual tariff ramps, giving industries time to adjust. Said that as one of many advisors to the president, he's made his current opinion clear.
Hoping his advice will be weighed.
Expressed hope the president observes whose predictions turn out right and weighs advice accordingly in the future. He generally favors free trade, lower tariffs.
But exceptions sometimes.
Yeah, but noted you might need to counteract predatory tariffs or huge government subsidies elsewhere on a case-by-case basis. Ultimately, though, stressed, it's the president's decision.
Okay, last Q&A point. Comparing the U.S. and China on physical AI, robots, drones.
On drones, Musk repeated a point that any country unable to make its own drones is vulnerable. Reported China makes about 70% of all drones, almost 100% supply chain control.
Expressed concern about U.S. dependency.
Yeah, concerned the U.S. can't currently build its own drones without Chinese parts. For humanoid robots, he asserted Tesla and SpaceX are #1 globally right now.
But worried about China catching up.
Worried that Chinese companies might dominate ranks 2 through 10 pretty soon.
Okay, so wrapping this all up then, we've dug through the financials, the autonomy progress, robotics, the competitive landscape. Quite a lot.
Definitely. The big picture seems to be, despite some short-term books, the focus is absolutely locked on that AI and sustainable energy future.
Yeah, the vision is clear.
Absolutely. And, it really makes you think, doesn't it? What does a world look like where personal transport, maybe even a lot of factory work, is mostly automated by these AI machines?
What new possibilities open up? What are the challenges we haven't even thought of yet?
Exactly. How does it fundamentally change, well, everything? Our economy, our daily routines? It's kind of mind-boggling to really consider.
It really is. A compelling thought to leave you with. What stood out most to you from this deep dive? Any questions still buzzing around your head about Tesla's future? We'd love for you to share your thoughts and keep exploring these really fascinating topics.